Hello, everyone. Welcome to our information presentation on the FY26 GFO Financial Table and Financial Statements. This is for both our on-year and off-year organizations. I'm Laura Weiss. I am a program director here with the Maryland State Arts Council, and my co-program director, Emily Sallenberger, is here with me. We're going to walk through all of this information to help you fill out your financial table in your GFO application. So what we're going to go through today, we're going to talk briefly about the financial statements and what is required for your organization. And then we're really going to break down the financial table that is part of the application. So we're going to talk about what we're looking for. We're going to talk about how to input those financials into the table. And then we're going to talk about the financial scoring that is associated with the on-year application only. So our first thing to look at here is what your financial statement should include. So financials should reflect your last completed fiscal year. So right now you are completing your FY26 GFO application. If your organization operates on a calendar year, so that means that you run from January 1st through December 31st, we're going to be looking for your calendar year 2023 financial statement. If your organization operates on a traditional fiscal year, whether that's July 1st through June 30th or a different variation of that, what we're looking for is FY24. So again, that's going to be your most recently completed year. These should be finalized documents, and they should be signed or authorized by your fiscal staff or your board. We do want to make a note that if you are an arts program, so that means that we're just looking specifically at your artistic programming and not the entire organization. Typically, this is going to involve our colleges and universities and things like that. You will need to provide audited financial statements for the full organization, but we're going to need you to complete the table and provide an additional arts program statement that reflects only your arts-based income and expenses. So that means that the table is really looking just at that arts programming. We're not looking at, if you're associated with a college, we're not looking for you to complete the table for the entire college. If you have questions about that, make sure that you reach out to either myself or Emily, depending on who your program director is, so we can make sure that you have the right information put in there. This is important to point out. This is new. There's some new details in here for this year. Previously, our threshold for if you needed an audit or not was $600,000. That has increased this year. So if your total allowable income is under $750,000, then all we're looking for from your organization is just a statement. So you don't need to have a formalized audit. So we're just looking for that most recently completed fiscal or calendar year financial statement. It must be signed by a professional accountant or the organization's fiscal officer. And then that signed financial statement must be submitted with the application by the application deadline. If your total allowable income is over $750,000, that does mean that you're going to need to submit an independent external audit that's prepared by a CPA firm, again, from your most recently completed year. The completed audit should be submitted by the application deadline. However, I want to make note of what's in italics here. If you're in the middle of your audit and it's not finalized by your application's deadline, be in touch with your program director, either myself or Emily, before your deadline to discuss sending an updated audit by March 1st of 2025 at the latest. So we can make that extension. We know that a lot of audits are currently in progress, but you do need to alert us to that. So reach out to us, and then we can provide what the next steps are for you while you're preparing your application, and then how to submit that audit at the later point. Again, we need to receive that by March 1st, 2025. So the financial table is actually what is in the application itself. What we're asking for in the financial table is for you to use the submitted financial statement or audit and enter the income and expenses for your arts organizations or arts programs most recently completed fiscal year. Again, that's FY24 or calendar year 23. The table should match the submitted financial statement or audit, so they should completely reflect each other. Within the table itself, there is a column that we're asking for you to include clear notes or instructions so that we can connect the various lines of the table to the information that's provided in the financial statement or audit. And we're going to show some examples of that later on. This is a screenshot of what the application in Smart Simple actually looks like. So while you're completing all of the various sections of the application, you're going to find the financial table itself under that financial information tab. You can see the arrow there at the top. And then there's a little blue button kind of halfway down the screen under the financial table header, a little blue button with a $ that says financials. You'll want to click on that. And then that's going to open the table itself. This is what the table looks like, or something similar to that. So you'll see there's instructions at the top there. I want to point out the little plus button that the arrow is pointing to here. So this is what, for every single line that you want to add to the various sections, you need to click this plus button, and it's going to add a line to the table. And then you have your options in the drop down for that corresponding section. So then you're able to choose, the screenshot shows allowable earned income. So you can then select tuition or sale of goods or memberships or whatever section it is that you're trying to complete for that particular line. So you'll just keep adding as many lines as necessary. If you only have perhaps two sources of allowable earned income, you would just click it for 2 and then add in perhaps tuition and memberships, and that's it. If you don't have sales of goods, you would just not include that in the table. So a lot of people often ask, why do we need to do this long financial table? There's actually a lot of things that we have to do on the back end that has to do with this table. So we meaning myself and Emily, we take this table and we have to match every single financial table to its corresponding financial statement. The financial statement is used to verify the numbers that you have input to the table. So they have to completely equal each other. We need to account for every numerical figure in the table. So we need to locate everything that's on the table needs to be located in the financial statement or the audit, and everything must align. This is how we determine and we verify the total allowable income figure, which is a variable in the funding formula. So it's extremely important that these are accurate and that they reflect each other. We want to make sure that you're getting, the most income, everything is, aligning, that we're not missing anything like that. So it's extremely important to be able to really share as many notes as you possibly can with us, so that way we're understanding how you are determining what's going from the statement into the table. Help us to connect the dots. Of course, if we have questions or we can't figure something out or we're seeing something different than what you have presented, of course, we're going to reach out to you. We're going to ask you questions. But the more information we have, the easier it is for us to determine this. And I'm going to pass it over to Emily to talk about all of the different categories here that you're going to see in that financial table.
Great, thanks, Laura. This first section is one of 3 different income kind of buckets that you'll see in the financial table. So the first section is really looking at your allowable earned revenue sources. So again, like Laura mentioned, you might not connect all of the numbers in your financial statement to all of the categories listed here. But what you'll see on the screen here is a list of the types of earned revenue sources that you should be able to go to your financial statement income sources and drop them into these particular categories. So again, if you have line items that align with admissions and ticket sales and memberships, you're going to want to identify those in the financial statement and drop the totals in there. Also noting, as we move forward in the table, when you're thinking about how you're dividing up your different income sources and expenses, you can only select each category once in the financial table. So if you have a couple of different lines for, say, sale of goods, you cannot select sale of goods, to collect 2 different lines or 3 different lines. You want to combine all of the totals into that one line. So that's just an important note. So earned revenue is one category. The next is the allowable contributed revenue. So this is another general kind of bucket of the contributed revenue sources that your organization might see. So again, not all categories need to be used, but select what is applicable to you. So you might have specific donations from your board and trustees that might be separate from your individual donations. You might have corporate sponsorships or donations. In particular, you're going to want to put your State Arts Council funding under the state government line. And again, divide up what makes sense for your organization and those different contributed income sources here. One piece to uplift here is that there is a section that is connected to your allowable income released from restriction. So this is in direct connection to if you have income that you received from one fiscal year, but you didn't use it until the next fiscal year and it wasn't released for use. It might be considered restricted in one year and then released from restriction in the next year. Here in this category is where you could put all of your allowable income that was released from restriction from that particular fiscal year and was used in that fiscal year. So say you have a fiscal year 24, you might have had restricted funding in the previous year for FY23, but it was released from that restriction in FY24 to use for your programming. That is where you would put that in your allowable income for this year because that is the year that it was used. It can get a little bit confusing with how the years and how restrictions might work. For this particular example, we are looking at funds that are restricted by time, not by program or use of funds necessarily, but this is really based around time. And again, reach out to your program director if you have any questions regarding where to put the restricted or release from restricted income. The next section is the non-allowable contributed income. So this is the last of the 3 sections for the chart. Again, not all categories need to be selected, but there are some notes here, and I'm going to go to the next slide. Actually, I'm going to go to this slide to kind of look at all of the listings of the non-allowable contributed income sources. So these are the types of funding that we actually cannot use to determine your funding. So they are considered outside of your general operating, or perhaps you've received additional funding from the state or the State Arts Council that are considered non-allowable when we're determining your GFO funding. It's certainly okay to have these sources of income. It's just how we have to divide up to determine funding. So you'll see there's a list here in kind of 2 categories. So things like loans, carry over from a previous year, if you're transferring funds or raising funds for an endowment, any kind of capital funds are considered non-allowable because it's such a specific use and not part of your general operating. This also includes the State Arts Council's new capital grant. So if you do receive capital funding from us, it is considered non-allowable. Additionally, a common one would be your in-kind goods and services are considered non-allowable, any other non-operating revenue. On the second column here, you'll see that if you received arts relief funding in the past couple of years, and it might be within, say, your calendar year 23, fiscal year, you would not be able to include that as allowable. It should fall in your non-allowable category, including if you perhaps receive special request funds from us. If you have any state legislative budget line items or appropriations, along with the Preservation of Cultural Arts Funds, or POCA for short. If you receive any of those kind of specialized funds directly from the state, those are all non-allowable. A couple of other points here, the restricted income, that is the very last category here, which I mentioned in the previous slide as well. If you have restricted income that isn't being used for your last completed year and has not been released from restriction, you will want to keep that restricted income in non-allowable, and then the year that it's released is considered allowable. Again, reach out to us if you have questions there. And then finally, if you go bump up to the bolded section around revenue from parent organization support to cover prorated expenses, this is really for our arts programs only. So if you're an organization that we're not looking at your full operations, say again using kind of our universities and our colleges as an example, we're not looking at the full organization picture, but we're looking at your arts-based programming only. When it comes to revenue from parent support, if you are getting funding directly from that kind of higher ed institution or another body that is overseeing your arts-based programming, if you receive direct revenue from that organization to conduct your operating in those arts-based programs, that's considered parent support. So this is also non-allowable. We expanded on the definition of this this past year. So this is fairly new and further expanded upon definition. It has always been within the GFO guidelines. We've just expanded on it, and we just want to make sure that it's clear to our folks that fall within these categories that we are looking for the parent support to go into the non-allowable section. So the definition is on the screen here. We've also provided it to you in emails and other communications. So if you have questions about this, please do not hesitate to reach out there. So those are our allowable and non-allowable income sources. There's also the expense side that you have to complete. So this is a little bit more straightforward. So the allowable expenses really are reflecting your operating expenses from that past year. So anything from your salaries to covering programmatic expenses, advertising and marketing, any kind of rent, mortgage, utility, insurance, all of those things that allow you to operate day to day, most likely will find yourself in these allowable expenses. There are just a couple of non-allowable expenses. And again, these kind of associate back to the non-allowable income lines as well. So if you've got capital expenses, those are considered non-allowable. Similarly, if you've got capital income, that's also non-allowable. Similarly, with in-kind expenses, typically we would see in-kind income on one side and in-kind expenses on the other. Both are considered non-allowable here. A couple other things here. If you are a grant-making organization, say you have a specific program that you're re-granting funds, those expenses would be considered non-allowable for the GFO funds, along with any depreciation that you include in your financial statements as well. So that is the baseline for our financial table. And there's a couple examples here of how when we're looking at the financial table in connection to your financial statement, like Laura mentioned, we are looking for that kind of corresponding line items from that financial statement to the financial table itself. So on your screen, you'll see an example of kind of a general profit and loss statement from an organization. You can see that the income here has it divided by tuition and gallery sales and studio fees and those sorts of things, and the total income. Well, to the very right, this particular organization numbered each line of their financial statement, and then that particular line they have corresponded within the financial table. So when we look at the financial table, it asks for where can you find this particular number in your financial statement. It was really easy for us to correspond the financial table number to the financial statement number because this particular organization numbered everything that they had. So it was really easy for us to make those connections and pick up where totals might be found in different kind of buckets of that allowable and non-allowable income. So that is one example that might be helpful for you. And here you can see it in action. So you can see under tuition, they took the lines 1, 3, and 4 and added them up together. Sale of goods, they took 2, 6, 7, and 8 lines and added them all up. So again, it was really easy to understand. Similarly, one of our grantees did a great example of this as well with their audit. So it's a little bit of a larger organization, and they were able to kind of identify their income without restrictions here and provided the kind of ABC system here for each of their categories as well. So again, it was really easy for us to then correspond that particular statement with their financial table. So here it is in action with the earned revenue source. So again, you could see it was, they labeled the first line as with an A, and then they also provided the page 56 of their audited financial statement, along with the descriptor of what that income is. So again, very clear notes really help us out a lot. So then we don't have to come back to the organization, hopefully as often, to ask further clarifying questions. So a couple other kind of pointers and helpful hints as you are completing the financial table. Again, using descriptive notes, including, the name of the type of income or expense, the line, page number, really where we can find that particular number is super helpful. If a number happens to represent partial amounts of a larger total or is made up of multiple lines or amounts in your financial statement, it's okay to include those notes about that breakdown as well. So an example might be if this represents $5,000 of a $10,000 contribution line on page 4. If there's a corresponding note within the audit that relates to the described line, also include that in the table as well. So again, if it's note 9 at the end of the financial statement on page 17, that provides further clarification for us, also really, really helpful. So the more notes and the more clarification you can provide in the financial table and any kind of identifiers in your financial statement just helps to make our lives quite a bit easier and to really understand your financial statement and how you're dividing up your income and your expenses. And I'm going to go ahead and pass it back to Laura to go through kind of the last couple slides.
Yeah, great. Thank you so much, Emily. On-year applications include a financial review process. So this is done by myself or by Emily, depending on who your program director is. There's 3 things that we are evaluating when looking at those on-year financials. So you can see them here on your screen. The first being that we're looking for financial information indicating a strong commitment to multiple diverse income streams. That's worth up to 4 points. The second is that the organization does not display any significant financial changes. Any significant financial changes are supported with programmatic calls in alignment with the organization's mission and vision. So if there is a surplus, a deficit that's considered significant, that we're able to then connect that to there's a programmatic calls. Maybe you added a whole new program and that's the reasoning. So that's what we're looking for there. That's also worth up to 4 points. And then the final section is only for the organizations that are submitting an audit. So those with a budget size of $750,000 or more. We're looking for that the organization is operating with a cash reserve of at least 1 year. And that, again, is worth up to 4 points. If you are below that $750,000 threshold, you just automatically get the full 4 points there. The entire section is worth 12 total. So that's how that works out. How this all plays into your funding formula, you are probably aware that the way that we determine your grant award is by 3 variables. We take your total allowable income, which of course that is what is coming from this financial table. That is multiplied by your panel percentage score, which is determined during your on-year panel review. And then that is multiplied by your cap allocation percentage, which is determined based on our budget and by your tier level. When you multiply all of those together, you get your grant award. So our review is really to determine and verify that that total allowable income number is accurate for your organization. That's why all of this is so incredibly important, and that we want to make sure that we have all of these notes and all of this guidance from you. So that financial review portion that I discussed on the previous slide, that is factored into the panel percentage score. Again, it's worth just 12 points out of the total. It's 100 points total. It makes up just 12 points. So that's everything that you need to know about the financial table, your financial statement, and your audits. Again, a reminder, our on-year applicants, your application is due on November the 15th at 11:59 p.m. And our off-year applicants, your application is due on December the 15th at 11:59 p.m. If you have any questions at all about the financial table, anything to do with the application, the review process, the panelists, any of that, we are more than happy to chat with you. Our email addresses are on the screen, and I'm sure you also have them in your inbox as well. But thank you so much for joining us for this session. We hope that it was helpful, and we'll be looking forward to seeing your application soon. Thanks.